as well. But now let's bring on board an expert to try and decode all of these global comments and the global market moves that we've seen last evening. We've got Mr. Rajeev Agrawal from Doordarshi India Fund joining us on the show. Rajeev, hi, thanks so much for your time. First up, what are you making of all these comments coming in from Donald Trump? First, on the Venezuela front, wherein they're saying that any money that Venezuela earns from the US for its oil will have to be spent once again in the US itself. How fair do you think this comment is? And in principle, how much do you think it's going to actually work?
Yeah, good morning. No, I think we are hearing a lot of comments from the president of the US around Venezuela and other matters as well. I think it is a fundamental change in how US has in the past treated these countries which are next to them. And clearly there is a change in stance where US is being a little bit more aggressive, let's call it, to handle issues that they have been seeing. Now, in terms of the Venezuelan oil, I think it will over time increase the amount of oil that we will see in the market. It won't happen immediately, but over time, we will see a lot more oil from Venezuela. As we know, Venezuela is has the biggest reserves of oil. So we will definitely see more oil. And I think it should ultimately put a little bit of a pressure on the oil prices so that they do not go up a lot. And I think that ultimately could be quite good for the global economy.
Rajiv, tell me, hi, this is Harsh, by the way. Um, uh, you are penciling in 4 rate cuts in the US next in the current year, 2026.
So we had 3 rate cuts last year, and I think given that the Federal Reserve governor or the central bank governor will be appointed this year, I think the pressure on the new governor will be very high to do the rate cut. So I would not be surprised if it is more than three. I know some of the street are thinking it will be less, but that's my expectation right now.
And how do you position yourself? Therefore, does India start to attract a bulk of the flows, given that there's been an outperformance from the rest of the world versus India, and therefore, relatively, does India stand out in your opinion?
So it's interesting, if you look at the FPIs that invest into India, 91% of those FPIs are investing from the emerging market portfolio. They are not just an India dedicated fund. And what we have seen in 2025 was that a lot of money moved away from India to some other emerging markets. Now, as these markets have risen quite a bit, I think clearly the value is not as compelling. And as India is doing a lot more reforms, I think the Indian markets will start looking a lot more interesting to these FPIs. And therefore, I would assume that there will be some money which will start moving back to India over the next few quarters.
How do you look at India from an earnings growth point of view and from economy point of view? Because we already have a first GDP estimate of 7.4% despite the tariff issue which India is facing, and also the geopolitics around it.
Yeah, so I think the economy is doing quite well. What is challenging a little bit is that nominal GDP is a little less, while the real GDP is doing very, very good. So clearly, the GDP deflator has been on the lower side, and therefore one may not feel it in the rupee terms. I think, given the reforms that Indian government is continuing to push for, I would not be surprised if India can continue to maintain a 7% plus growth rate, real GDP growth rate over time over the next few years. And the one thing that did hurt India, primarily because of the INR depreciation in dollar terms, the GDP did not grow as much as one would have expected. But that is possibly a one-time thing, and it might even help the Indian economy be more competitive with the rest of the world. So I'm actually quite positive in terms of how India is looking and the opportunities that we are seeing in India. Going to your question on the earnings growth, I think earnings growth have been muted for the last few years. And I think that will start showing up as there is more consumption and more infrastructure that gets developed. So I expect that the earnings will start improving from here.
Rajiv, how realistic is the vision of President Trump with regard to Venezuela and extracting Venezuelan oil? Because it's not only going to take $100 billion of investment at the very least, it's also going to take a lot of courage to going to a new geography for American companies who have burnt their fingers in the past because of nationalization of the oil infrastructure which Venezuela had. How realistic is this, in your opinion?
I think clearly the companies would want some sort of a US government defense guarantee around their operations, right? So I think it will be not just where the companies are going to go by themselves, but there will be an overlying guarantee from the US government saying that they will be able to go ahead and produce. And given that US has big navy and a lot of that currently is in that area, there is a possibility that there would be some sort of that deal, which will in turn give a lot more confidence to these companies. As we know, President Trump is meeting with some of these oil CEOs later in this week. And so I think we will start hearing more of what exactly are the contours of how this will play out.
Okay, Rajeev, thanks so much for your time. On that note, we'll let you go. Thanks once again for joining us.